In today's lecture, we looked at this lease transaction and we looked at the current tax calculation for the lease, and I showed you that we have temporary differences because over the 10 years, the tax and the accounting effect will be the same. So what I want to do in this video is just to show you the amortization table for this lease. So how do we calculate this amortization table? So first of all, we've now calculated that our lease liability is 5650. So an amortization table, what we do is we put in our payment amounts, and we know that every payment that we do, every R1,000 payment that we pay, will have an interest component that will go to P&L, as well as a capital component that will decrease the outstanding capital balance for this lease liability. So we start off with a 5650, which is the outstanding liability at the commencement of the lease, and then we make our first payment at the end of the year. Now this payment will have an interest component, and that interest component is calculated as the 12% per year multiplied by the outstanding amount of 5650. So it's a full year's interest on the outstanding balance. So that gives us interest of 678 for the first year. The difference between the 678 and the 1,000 is 322. So the 322 will decrease the outstanding balance to 5328. So my new outstanding balance at the end of year one is the outstanding balance at the commencement less the capital portion of the R1,000 payment. So the R1,000 payment has an interest component as well as a capital component. Now in year two, when I make my next payment, again it will have an interest component. But now the interest component will be calculated as 12% on the new outstanding balance of 5328. So the new interest component of the new payment will be 639. So the difference between the actual amount that I'm paying, the R1,000, and the 639 interest will give me the capital portion that I'm paying, so that's the 361. And this 361 is going to decrease my outstanding capital balance, bringing it down to 4967. And we are going to continue doing this for every year, for all of the 10 years until we get to the end. So here we have our full amortization table, and you will see now that every payment that we've made, we've broken that up into its interest component and its capital component. So now when we add up all the capital components for the 10 payments, we get to the 5650, which is the repayment of the capital amount outstanding on day one. And then if we add all the interest that we had for every year, the 4349, if we add the interest to the capital that we've repaid, we get to the full amount that we've paid, all the lease payments over the 10 years. So the lease payments have been broken up into repayment of the 5650 outstanding amount, as well as the interest expense over the 10 years of 4349. So for what we did originally when we accounted for this lease liability, we had a debit to our right of use asset of 5650, and we had a credit to our lease liability of 5650. So with regard to the lease liability, we will now be repaying it every year with a R1,000 repayment. So when we do that payment journal every year, we'll say credit bank with a repayment of the R1,000. Then we'll say, for the first payment, we'll say debit the interest expense in P&L of 678, and the other debit will go to my lease liability to decrease my lease liability and with a capital amount, so that now the lease liability balance is sitting at 5328, and it's now decreased from the original amount of 5650. Okay, so that is what's going to happen for accounting purposes. So for accounting purposes, we will have this interest expense every year the interest expense will go to my profit or loss. So over the 10 years, we'll have a total of 4349 in our profit or loss as my interest expense. However, we will also have depreciation. So because of this fact that we have the right of use asset, this right of use asset will also be depreciated over the 10 years. So we'll have another expense. So if we now look at our right of use asset, we will calculate depreciation on that over the 10 years. So we'll have depreciation expense to the P&L of 565 every year. So over the 10 years, we've got the full 5650, which is the original amount of my right of use asset. So this also all goes to P&L every year. So what we end up with is in our P&L is we end up with the 4349 interest expense as well as the 5650 depreciation expense. Okay, now when we add this up, with these two amounts, when we add that up, you'll see that we get to our total of 10,000, which is also the amount of the total payments over the 10 years. So that is exactly what is happening in our current tax calc. Every year over the 10 years, we have to eliminate the accounting treatment, which is to add back the depreciation. And the depreciation in total, the 5650, will also be the same as the capital amount outstanding originally for my lease liability. And then the interest expense that we'll have over the 10 years for this lease liability, the 4350, when we add that 4350 in total to the 5650 total, we will see that that actually totals to 10,000 Rand. So we're adding back 10,000 over the 10 years. Now what's happening for tax purposes? For tax purposes, we are deducting 10,000. We are just deducting it as in different timing. So we're deducting a straight amount of 1,000 Rand over the period. So that is why we end up, for tax purposes, also with a 10,000 deduction. So that's why we have a deferred tax consequences after year one, because we've got a timing difference between tax and accounting. But over the 10 years, the effect is still nil. So in our deferred tax calculation at the end of year one, we have our right of use asset carrying amount of 5085. So that's the original amount we recognized, 5650, less the depreciation for the first year, giving me my carrying amount. And we have our lease liability carrying amount of 5328. Now that lease liability carrying amount comes from our amortization table at the end of year one. Here at the end of year one, we have our 5328 outstanding amount. Now, note that that 5328 outstanding amount is going to be repaid with the capital portions of my lease payments 2 to 10. So these lease payments, when I pay them, they will include the capital components, which will be the repayment of the 5328. And now we have to remember that these lease payments that we are going to pay will be the amounts that will be deductible for tax in future. And included in that 1,000 Rand amount that will be deductible for tax in future is the capital components. So when we're now calculating the tax base for the lease liability, we have to say the carrying amount of the lease liability, which will be 5328, less the amount that will be deductible in future with regard to this liability of 5328. And now we can see that the full 5328 will be deductible in future when we deduct these payments, in the lease payments in future, the full lease payments in future. So the full 5328, the capital portion, will be deductible in future. Therefore, the tax base will be 0. Okay, so that's why our lease liability, the tax base is 0. Because this 5328 includes all the capital portions of my lease payments for years 2 to 10. And remember that the capital portion is only one portion of my total lease payment. There's also an interest portion, and the full 1,000 Rand lease payment will be deductible for tax. And because of the 1,000 Rand is deductible for tax, the capital portion of that 1,000 Rand for each lease payment will be deductible. So that's why we have a nil tax base, because the amount that will be deductible in future will also be the full carrying amount.